Today, we're going to be talking about starting an account with M1 Finance so that you can get started in stock investing. I know that when I first started looking into stock investing, I looked into a lot of companies. I had an idea of what I wanted to get invested into, and I just had no clue how to get started. I want to shorten the learning curve for you so that you can get started earlier than I did in getting your investment account set up. Stock investing is one of those things that I think everyone knows that they should be doing, but not everyone knows exactly how to do it. All right, so this is part one, maybe part two, if you consider my last video, of my building up to a $100,000 portfolio. If you want to get insights on building your own $100,000 portfolio and just want to watch someone else do it as well to get some ideas for you, then consider subscribing. Personally, I am a visual learner, so I know how important it is to actually watch someone else do something, and then you can replicate it for yourself. Also, I'm going to be talking about the companies that I'm investing in, why I'm investing in them, and hopefully that helps you out when it comes to you picking out your own stocks. M1 Finance, I mention it in every single one of my videos because it is the stock investing platform that I like the most. It's built with the long-term investor in mind. And by long-term investor, I mean someone who's going to buy and hold stocks for a long time. I've been using it for about a year now. I really like it. It's a little bit daunting at first, but once you get the hang of it, it's really user-friendly. Once you set up your portfolio, it will just automatically invest into it for you without having to do anything else. Really, it can be one of those one-time setup things, and then you can be hands-off. I mean, you probably still want to watch the companies you're investing into just to make sure that you're not investing into a company that is going downhill. But for all intents and purposes, you could theoretically just take a step back and just put money into the account and it would keep making money for you. Okay, so what kinds of accounts can you set up within M1 Finance? There's a few different options. I have a Roth IRA in there, and then I also have a brokerage account that is taxable. So it's an individual account. It's not a retirement account, which means that I can put money into it. I can pull money out of it whenever I want. So I can sell those stocks and get my money back out if I want to, whenever I want to. There's no stipulation for having to keep my money in there for a certain amount of time or have to be a certain age before I can pull money out of it. The individual account, which is the taxable account, that is the account that you will want to set up if you are, like me, going for financial independence, because that way you won't run into any problems when you go to pull your money out and try to start living off of your dividends like I'm doing or your portfolio balance. Okay, so this is M1 Finance. So once you set this up, there's an app on your phone too. It's not as robust as the website, but you can do a lot of the main things on the app as well. So as you can see, I have a little over $4,000 in here. $4,384.57 is what my current portfolio is worth. I feel like it's pretty straightforward. I've made a gain of $187 so far, and that is taking into account both earned dividends and market gain. As you can see, this portfolio is about a year old at this point. I started using M1 Finance August of last year. And it's been doing pretty well ever since. I threw in a little bit of a chunk here, about $600 during the initial downturn when the virus that shall not be named started happening, because I thought maybe this was the bottom of the market. But as you can see, it continued to go down, but it's worked out in my favor so far. Okay, so this is the part that I love about M1 Finance, is this pie setup. So as you can see, I've got a bunch of different slices in this pie. As you can see, it's round like a pie, and these look like they're slices. And I have taken the businesses, I've put them within each sector that they fall into, and you can actually call your slices whatever you want. I've found this to be a good way to organize things. Within each sector or each slice of the pie, you can tell M1 Finance how much of a percentage of your portfolio you want that to be. So I've got this slice for tech. I've told M1 Finance I want 5% of my portfolio to be in tech. So it automatically makes sure that 5% of my portfolio is invested in the tech industry within the companies that I've put within this slice. So each slice is actually its own pie within the main pie. So right now I have tech industry, healthcare, industrial, telecom, finance, consumer, real estate. I personally really like real estate. I want to get into real estate investing myself at some point, and I really like the idea of having a hard asset like that to generate income, but that's a video for another time. And then as you can see, a good chunk of my portfolio, 35% of it, well, right now it's 33.5%, is in index funds. I've slowly been making my index fund slice smaller and smaller as I've gotten more and more comfortable with evaluating stocks and deciding which companies I want to invest in. Index funds are awesome. As you can see, I really like Vanguard when it comes to index funds. I've got this thing split up 3 ways between the total stock market, Vanguard S&P 500, and the Vanguard High Dividend Yield Index Fund. All of them are doing really well. But the point of my portfolio is, as you can see, I've named it passive income. So what I am mostly interested in is this section, the earned dividends. So total earned dividends over the last year is $72.93. That is $72.93 that I didn't have to work for. I had to work for the money that I initially used to buy those stocks. But then those stocks started paying me back through dividends. So the goal is to get to the point where my dividends are paying me enough to live on. That way I don't have to be dependent on a job in order to survive. Now, don't get me wrong. I love my job. I'm not trying to work myself out of a job right now, but you never know when the tables can turn. You never know if maybe the people you work for sell the company and then the new company that comes in changes things to where you don't like it anymore. I've been in that situation before. And I just want to have a hedge against that kind of a situation. And so that's why I'm working towards financial independence. So as you saw when I clicked on this, I'm invested in these index funds. In the tech side of things, right now I am invested in Microsoft, Apple, Sabre Corp, Cisco Systems, and GLW, Corning Inc. My consumer slice is doing really well. It's up $72. There's been a lot of volatility within my portfolio during this whole virus that cannot be named that's been happening. But these are all really good stocks that I've found to hold on to. The one that I'm most questioning right now is Cinemark, with the way the movie industry is going. If you don't have Cinemark in your area, Cinemark is a movie theater chain. I'm kind of hoping that there's a bounce back in movie theaters once we are out of quarantine. But all of these companies pay a dividend, so they give me a percentage of their profits. Costco has done really well. Home Depot has done really well. Those are the two that have mostly been in the green compared to the others over the last little while. But we're seeing an uptick on some of these other ones as well. So that's kind of an overview of how M1 Finance works. If you want to add another slice or another company, you just come down to the edit button and you can change the percentages of what you're investing in. And over time, as you put more money into your account, M1 Finance is going to put more money into the sections where you don't have as much invested into it. So if one of your slices is undervalued compared to the others, it's going to prioritize that one. It's going to do its best to keep your pie pretty well rounded and evenly split. So right now, my tech stocks are set to be 5% of my portfolio. If they lose value and go down to like 4%, the next time that I deposit money, M1 Finance is going to prioritize that slice and put more money into that sector. I know that this account looks like it's only a year old. I've actually been investing in the stock market for about 4 years. I started with a company called Betterment, which as I started learning more about stock investing, I realized was more targeted at people that didn't want to look into the stocks that they were investing in. In fact, Betterment mostly invests in these Vanguard index funds and bonds. I realized that I could recreate exactly the pie that they were investing into, to apply M1 Finance's term to Betterment. I could recreate that in M1 Finance and save myself a little bit on fees. That was the main reason why I made the switch to M1 Finance, because they don't charge fees, but Betterment did. By switching to M1 Finance, I was able to make a little bit better gains than I was with Betterment. Getting started in the stock market is really easy. It's low barrier to entry. I started out putting $20 per month in. And then after about 6 months, the free 6 months with Betterment ran out, so I upped it to $50 per month. Then as I continued to snowball my debt and pay off more credit cards, I started allocating some of the money that I was putting towards paying off debt into my portfolio until I was able to get to the point now where I'm putting in $200 per month. So I've been snowballing how much I've been putting into the account, but also it's been generating dividends, which is profit shares from companies, and they are also adding to the balance that you see here. Personally, I am doing dividend growth investing, so I don't invest in stocks that are considered growth stocks. A growth stock would be something like Tesla or Amazon. They don't pay a dividend to investors, but what you're doing when you buy into those is that you're hoping that they increase in value by the time you sell your stock. What I'm doing is I'm investing in companies that share their profits with their investors and give you a small percentage of the amount of money that you've invested with them. So essentially, they're giving me a paycheck for giving them money. It's going to take me a while to get my money back, but eventually it's going to get to the point where I can live off of these small paychecks that they're paying me, and I can be financially free and independent. If you want to get started with M1 Finance, I have a link in the description below. They're currently doing a promotion where you get $10 and I get $10 if you use my link. It only requires a $100 deposit to get started, and then it can reinvest into your portfolio every $10 you put into it. So you could get started with as little as $100 up front and then $10 a month, and then you would be investing and getting started on your investment portfolio. Now, here is a 4D chess thinking idea right here. I've also got a link below to another platform called Webull. If you deposit $100 into your Webull account, and you don't even have to invest it, you just have to deposit $100, you get 2 free stocks. One of them could be valued up to $1,400. So if you open the account with Webull first, put in your $100 there, get your 2 free stocks. Once you get your 2 free stocks, sell those, and then withdraw your money out of Webull, then start your account with M1 Finance. You'll have a little bit of a leg up when it comes to stock investing there. So sign up with Webull, get your 2 free stocks, sell those, then sign up with M1 Finance and get your free $10, and then you can start your investing journey with, at a minimum, $130. $30 of which is free. I hope this helps you out. I hope this helps out those of you who don't even know how to get started in stock investing. Really, you just need to set up an account with this. Webull is actually a really good one as well. I've messed around with that platform a bit. I just prefer M1 Finance. Robinhood is another great one. If you want to do this there and replicate what I'm doing on M1 Finance within Robinhood, then you can do that as well. All right, guys, thanks for watching, and I will talk to you next time. Peace.